Cognizant just posted its latest set of results this morning India time and US time last evening, and you would have expected me to cover and talk about those results in detail. So we will talk about that, and I will also talk about the crisis, and we will see if they are able to handle the crisis better in this quarter. Warning, don't expect too much. So let's explore some of the data points first, and we talk about other data points like employee metrics, which is of a lot of interest these days, as also the operating margin for its stock market performance and the revenues. But I'll also tell you that I missed few results: Tech Mahindra, SCL Tech, Mindtree, Emphasis. So I am planning to come up with these results from here on. So you will see me covering these companies quite regularly. Not only that, probably you will see me covering the global companies also. Microsoft just posted its latest set of results yesterday. Alphabet, which is Google's parent company, posted its results yesterday. So you will see a lot of companies. We will talk about that. In fact, the global companies. Let's look at some of the numbers now. Revenue in Q3 2021 for Cognizant came in about $4.7 billion, which is roughly 11% growth year on year in constant currency term. And this number was around $4.2 billion last year, but last year the performance was not very bad. In fact, last year Cognizant's revenue declined. So this is not apple to apple comparison, but the right way of looking if there is really significant growth in, is to see the sequential numbers. So let's see what was their quarter on quarter number. Last quarter they were $4.5 billion. Now this quarter they are $4.7 billion, which is roughly about 3.5%, 3.5% growth. If I look at the industry trend at the moment, you will see Infosys did about 6.5, SCL did about 4%. If I look at some of the other names like Wipro did 7.8, and the mid-sized companies are doing quite well, so I'll not talk about them because again their token size is quite small. But if we look at TCS did I think not that well, and you would have seen the impact of that in the results in the stock market performance. The stock has come down about 15% from its highs, so that is reflecting. So TCS performance was around 3% quarter on quarter growth, while Cognizant performance is about 3.5% growth in constant currency terms quarter on quarter. So in terms of operating margin, Q3 operating margin for Cognizant was about 15.8%, which is less than Q3 performance of Cognizant in 2020, which was 15.9%. And again, as I said, their performance in 2020 itself was not very good. That's why this number is not looking very pleasing. And if I go back to the history and see how their operating margin was before Mr. Brian Humphries in 2019 or before 2019, their operating margin before 2019 during 2017 to 19 period, despite having tough external environment, it was around 16.5 to 17%. Since Brian Humphries took over the Cognizant, the average operating margin is ranging around 14 to 15%. So straight away we see a huge decline in terms of operating margin. If we look at the industry trend, you would have seen TCS is clocking the operating margin highest in the industry, around 25-26%. Infosys is around 23-24%. Wipro is around 19-20%, and also other companies are clocking around the same numbers. But if we look at the global players like Capgemini, also like Accenture, we will see the operating margin is coming down slightly around 14 to 15%. But that is because their higher base is outside India. But in Cognizant's case, comparing with Accenture and Capgemini is not the right policy, but the comparison should be done with Infosys and TCS, because their large base is in India. If we look at some of the standout verticals, communication, media and technology was growing about 20% in this quarter for Cognizant, and what we saw is a similar pattern for Tech Mahindra as well as Accenture. Their communication, media and technology area was growing quite sharply compared to other divisions. And if we look at some of the other lackluster segment, which was financial for them, for Cognizant, financial just grew about 5% in constant currency term for Cognizant, which is not a good growth because 1/3 of the overall revenue for IT service companies come from the BFSI sector, which is the financial sector. If we look at the geographies, EU is growing quite well, around 16.9%, rest of world 22%, but the token value would be smaller. North America is 9.7%. I have been noticing this similar pattern. EU is coming up quite nicely. And now that is the most important, which is employee metrics, and I'm pretty sure a lot of you would want to hear what's happening on the employee front. So if we look at the total employee headcount now, Cognizant has about 318,000 employees on the roll. However, what's important is their attrition rate has gone up by 25 or 25% in just 2 quarters. If you look at the previous quarter, their attrition was around 31%. Now the attrition has gone upwards 37%. Out of that, the voluntary attrition was around or is around 33%. That shows that the crisis is not over. In fact, the crisis is just worsening and becoming bigger. And what's interesting is the kind of net additions they are doing despite that high level of attrition. Think of it, year on year they have added about 35,000 employees on the roll, while they have lost about 120,000 people from their role. In essence, they hired 150,000 employees to compensate for those 120,000 employees. That's how this employee metrics playing out at Cognizant. And think of it, when your existing employee go out, how much higher you have to pay to bring another similar employee on board. That is going to cause a great dent in their future operating margin and profitability also, and that nobody likes. At least the investors don't like it. Now the other point is, if they are paying this much high these high salaries, are they sustainable? I have that doubt. They cannot sustain at these levels. So something of probably something bad news might come again in the future when they have to cut down on some of these unnecessary or extra headcounts or expensive resources, probably in 2-3 years. That's something which is worrying me and concerning me. Another aspect which I looked at is their utilization ratio. I have been noticing the industry utilization ratio is around 88%. That means 88% of the time employees are billable, while in case of Cognizant, their billability is ranging around 84%. That means they are not earning as much as the other companies are earning from their resources. However, they are paying much more than what industry is paying at the moment. That is one other aspect. Now coming back to their acquisition streak, I looked at their acquisitions and I found a strange name called STR Jobs, and this STR Jobs was a strange addition. It's a staffing company. If you look at if you Google it, you will find it's a staffing company. Now, what is the role of a staffing company in IT services company? Is that something to do with because they want to hire more people, retain them, so that's why probably they are trying to create a separate entity or separate unit which takes care of employees side. We'll have to see that, but this gives a hint of something around that. Now let's look at their overall FY21 guidance, and if we look at and compare it with the previous year total revenue they gave us, it was around 16 billion or over 16 billion. Now they are expecting the revenue for this whole year, it's Q3, then the Q4 numbers will come. So these are the tentative numbers. When we look at this revenue which is they are quoting around $18.5 billion for the whole year, it will be a growth of 9.8% in constant currency term. That means the overall percentage overall growth is less than 10%. If we look at the comparison and compare it with the industry peers, Infosys is growing and giving the guidance of around 16 to 17%. So that gives you an idea how much ground Cognizant has to still cover. That does not mean that all the companies are growing at 16-17%. Infosys is growing that rate. Wipro is growing around 12 to 13%. TCS is not giving the guidance, but it is always growing well over 10% or double digits. So this is where they stand. Right now, my point is, if they are able to grow at let's say around 10% despite such a huge crisis where employees are coming and going, that means in terms of the brand value of the Cognizant, people still trust Cognizant a lot. However, probably the mishandling aspect is causing a great dent and will see some pressure on their profitability going forward. But in terms of client trust, CTS still I think holds the appeal in terms of the customer view. Finally, my view is that despite having such a tough time, if Cognizant is able to withstand this this difficult time, probably they will recover. But will they recover under this leadership, or will they have to find another leader? That we will have to see. If I to me, it would be always good to come up with a different leader which gives the market the confidence, the employees the confidence. This is my personal opinion. What do you think of it? Please do write me about it, and wait for my discussion on Tech Mahindra, Mindtree, SCL Tech, probably Alphabet, Capgemini, and also likes of DXE and Microsoft. We will talk about all the companies over here at this space. Thank you.